Darren Newsom from DTN is our grain marketing analyst this week. The USDA Monday released its March supply and demand estimates. On the global scene, the USDA left Argentina's soybean production alone, but decreased Brazil's to 88.5 million metric tons due mainly to hot, dry weather in Brazil's south. Brazil's national supply company CONAB significantly lowered its projections for the country's soybean crop, trimming the size from more than 90 million metric tons to about 85.5 million metric tons. The current estimate would be almost a 5% increase from last year and therefore still set a record. We talked with Darren at the Triumph of Ag Expo in Omaha Wednesday as the soybean market was having a hard time staying afloat.
The biggest thing that I see in the soybeans right now, I know there's a lot of talk at, all of this happened, the USDA report this, that, and everything else. But the biggest thing that I see in soybeans right now is U.S. exports look to be coming to an end. We've had an extraordinary pace through the first half of the 2013-14 marketing year, and just by how the market's selling off, where the pressure's coming from, it looks like that this door has just slammed shut on U.S. exports this week. And we'll see what happens in the weeks to come.
The reality is, even by the USDA's estimates, there just aren't that many beans left. Now, by your estimates, how many beans do you think are still left in the U.S.?
Well, that's a good question. USDA, in its March report, pegged ending stocks at 145 million bushels. I still argue that they aren't accounting for all of last year's shipments, so we could actually be looking at 10 to 15, or I'm going to say about 10 million bushels less than that, so about 130, 135 million bushels. If we stay on the pace that we are right now for U.S. exports, that would actually put us into negative territory. We would have simply no beans left whatsoever. That's not going to happen. But I do believe the situation is tighter than the 145 million bushel. I think the market is showing us that, and it's going to take some sort of change in demand to get that to finally see beans start to slow down.
If today, and it's still Wednesday, but if this is an indication that the ship might be taking on a little bit of water here, where's the resistance? Where do you think it can find some support?
The biggest thing in the old crop beans is that we ran up to just over 14.5. I think we hit a high of 1460 here recently. The problem with a sharp run up like that, and again based on demand, was that there's very little underneath it when that demand shuts down. So we really don't have any technical or chart support until we get down to about 13.5, and at that point we're going to have to see if the buyers get interested in the market again.
Brazil's CONAB today is estimating that Brazil's soybean production is going to be down quite a lot from their previous estimate, from 90 all the way to about 85.4. How much impact would that have maybe here in the U.S.?
Again, I think longer term it's going to provide another level of support into this market, because so much of what we've heard, again, as you mentioned, throughout the course of the winter was 90 million metric tons of production in Brazil. If that doesn't happen now, that means we could see even more U.S. beans shipped out into the market, with all the other issues that are going on. So I find it interesting how Brazilian production continues to be whittled back. The market really isn't paying attention to it again this week, but I think it will, in time, take note of these reductions.
New crop soybeans, if producers haven't maybe used the rallies already to sell off some of those, what do you think is maybe an opportunity here?
I think there's still some potential in the new crop soybean market. Depending on what happens with December corn, depending on what happens with weather, I think the 3 million acre increase in soybeans that everybody's talking about after the annual outlook from USDA in February, I think that's in question. And so the soybean market may want to wait. Let's see what happens with corn. Once the corn planters start going, do they keep going? Do they take some of these acres back from beans? I think that's going to provide this level of support for soybeans, going to hold us in the upper 11s, low 12s, with a weather scare pushing us even beyond that.
Does basis move or improve at all here as we go towards planting?
I think so. We've seen basis sag, both corn and soybeans, here over the last 30 days or so. But as we get into the planting season and producers get busy, they're not going to be moving as much corn, they're not going to be moving as much soybeans out of their bins. Merchandisers are going to have to try to push that cash price, and that means a stronger basis level.
Let's move to old crop corn. What do you think is the trade range for old crop corn?
We've pushed up to near 5. It seemed to be a little heavy at that point. It created a lot of cash sales. In other words, producers started selling what was left. So I think in this 450 to 480 range, market's going to be comfortable to sit for a while. And then as we get into spring, maybe push the upper side of that range with an occasional shot maybe towards the 5. But I just don't see it taking off and exploding right now. I think it's going to sit here for a while.
What does that mean for the cash market?
Cash market, I think, is going to firm. You know, right now we're seeing corn somewhere around 25-30 cents underneath. Cash corn 25-30 cents under the futures. So if we hold, say, in that 25 cent level, we push up to about 480, 485. We're looking probably 460, 465 on the cash market. National average cash price.
Where would you start to be a seller with more new crop?
We've seen what the February average price was, so setting the guaranteed price now, and I believe it's in the 460 area, 450, 460 area. So now that we're getting the market, the December corn contract back above, up into the upper 4s, into the low 5s, I think that's going to generate some sales because producers are going to look at that and say, look, I can make money selling corn for up around $5. So I think that's one of the things that could possibly draw more acres into the corn, into corn this year. Certainly providing producers with some opportunities to make some sales. I wouldn't wait too long. You know, if we see the corn getting that high, again, we've seen it here already. Once we get up there, yeah, I think we need to start increasing our sales pace a little bit, get some on the books.
And finally, what are your expectations towards the end of the month when we see that grain stocks and both the prospective plantings report come on the same day?
I think the grain stocks are going to be the interesting number, at least to me, because I think that the plantings expectations could be discounted right off the bat due to March weather. But when we look at corn, when we look at both corn and soybean stocks, I think we're going to see smaller soybean stocks than expected, again, due to this extraordinary pace of demand that we've seen over this quarter. The question is going to be corn, because right now USDA is projecting record demand for this marketing year, meaning we have to see this second quarter, this Dec-Jan-Feb quarter, using up a lot of the corn that we had on hand. If we don't, if we fall short, if we actually see larger corn stocks than what's expected right now, that could be one of the things that really starts to knock corn back down.